So Nelson is the founder of this stuff. So when people ask me about infinite banking, I say, well, have you read the book? Even other advisors, oh, they're telling why this will work better, that work better. Well, dude, have you read the book? No. Then what the hell are we talking about then? Because you don't even have a point of reference. I was on a Clubhouse with this young guy, and he's trying to compare it, and I was like, well, have you read the original book? No, because if you read it, you understand it's not about life insurance. Okay. Banking is a concept. So it's, it pros drives us both crazy. All the nonsense you hear on IG and stuff about, oh, I got this great insurance and use the stock market and blah, blah, blah. And so Nelson would turn over in his grave. But so Nelson, what happened was Nelson, if you reread the story, the book is a book about ownership. All right. About a business where you're both the consumer and the user. So he talks about the grocery store in the first part of the book. And but what happened was what birthed it. Nelson was in the real estate business. Nelson was in the land business. He was a forester, right? And so he was doing flipping land and doing these deals. But he said all these geniuses out there, oh, use leverage, right? And so at one point, this is like 78, 79, the rates went from like 8 to like 23. And so he was caught out there owing like $500,000 at like 23% interest.
Right.
Which was like 800,000 because one of his partners was a prominent attorney in Birmingham, bankrupted. So he ended up owing 800 grand. And the interesting thing was, he says, all right, what am I going to do? He says the idea came to him at 3 a.m. after spending a lot of times on his knees in prayer. If you hear Nelson talk about it, and he calls them, how can I get rid of these snakes and dragons? This is what he calls them. So he had been used to paying permanent insurance premiums. So he's paying about, this is big in late 70s, $18,000, $20,000 a year of policies, right? And then it came to him, wait, I can get money in these policies I've accumulated at, 7-8%, where I can control it and I can get rid of these snakes and dragons. So in his mind, and it took me like 3 years to understand this. So when I talked to him, I was like, wait, because most people say, well, all right, I got to cut back on this stuff because they see insurance as an expense. He says, I need to rearrange my finances. And he determined he need to pay $100,000 in premium, right? Because, and to get the $500,000 he needed. And so it took him about 8-10 years to get enough money in the capitalize his policy enough so he could take policy loans, pay off the debt, and then he would systematically recapture the debt. Because because what happens with banking, it's a process. Most people don't know it, because here's the thing about Nelson. Let me finish that thought. Nelson was doing this. So he's quote unquote retired from the insurance business in 2000, right? And so the book is his course he was teaching. And he just put it into a book form, and it's not for insurance agents. All right. It's for the consumer.
Right.
First of all, and he had been doing this for 25, 30 years. So it wasn't like he wrote a book. He hadn't used a commercial bank for anything other than a checking account for about 25 years. Okay. And he, you know what I mean? So that's significant because this wasn't, he had been doing this. So we study something called Austrian economics. There's so much mentally behind this stuff in selling insurance. Most people out there have no clue. They don't know how the contracts work. They don't know the economic philosophy behind it. And so Nelson, because he was an Austrian, saw the process of what he says, look, the policy works kind of like a bank. It's just a place to store cash so you can control the money that flows through your life. And so what he realized that while everybody's running around thinking about investing, 35 cents of every dollar leaves your household in the form of debt to others. So, the first thing you need to do is recapture money that you're giving away. And so that's kind of like the first thought process of that. And then and he says, listen, if you solve for your need for finance, your cars, your vacations, your wherever, you'll have way more insurance than a lot of times the insurance company will allow you to have, right? But the thing is, if you will, if you think about a car, right? So you might, let's say it's a $30,000 car. I know y'all all are balling out there, and it's a $50,000 car. And let's say over the next, let's use round numbers, 10 years, you'll buy, over the next rest of your lifetime, let's say you buy 10 more of those over your working lifetime. So that's $500,000. gone. Okay. Not just the money gone, but now the interest you paid to somebody else's financial institution. And it's what people don't count, the opportunity cost of what that $500,000 would have been worth had you been able to keep it, right? That's what you're solving for. How can I keep this $500,000 in my personal economy? Let me stop there. And so that's what I learned from him.